Good morning, all. It's Steve here from Signal Centre. Today is Tuesday, the 2nd of November, and welcome to another version of Talking Bull, episode 489, getting close to that 500 mark. Brilliant. So, what have we got today? We've got Asian markets continues to struggle as weakness throughout the region is headed up by a 1% drop on the Chinese XSI 300. That stands in stark contrast to gains seen in Europe and the US, with the Russell 200 making the most notable move after rising 2.65% in a bid to break from a 9-month consolidation phase. Tesla continued its winning streak, with the stock gaining over 8%, despite Musk warning that the Hertz deal had not actually been linked or been inked. An overnight the rate decision from the RBA saw the bank scrap their yield curve control policy. The bank also dropped their reference to 2024 as a target for the first rate hike, with markets now expecting to see them move earlier in 2023. Looking ahead today is the lull before the storm, with a large empty economic calendar, so a little bit of a respite, paving the way for a raft of economic and central bank announcements in the remainder of the week, with non-farm payrolls finishing us off on a Friday. So let's start with FX. Let's drill down into what's going on. The dollar index, we are still looking pretty positive on this dollar index. This is the weekly chart. We've got this treble bottom, double bottom, and we are above the neckline, and we have retested and still looking strong. So we're fully expecting this to turn into a nice impulsive move higher. Looking to target 61.8% at least of the Fibonacci retracement level, coming in at 97.27. Sorry, 97.72. Really need to break above resistance, currently at 94.74. Just hanging around the 94 area currently. So euro dollar, this has led to a little bit of a recovery in euro dollar to start the week. Let's take a look at the 4-hour channel. However, this is still looking pretty ominous for euro dollar. We still expect further downside. 117.05 for me is the major resistance level. It's a combination of previous swing low turned into resistance and the downward trending channel. Bullish momentum is stalling, and we've got this bearish outside candle which is dominating from the 29th. So that's one to be worried about. This is the daily chart. I think I might have said it was a 4-hour chart for some reason. So that's the daily chart. Let's flip that to a 4-hour chart. Still the same channel. So let's take a look at cable. What we're looking at cable on, still under a bit of pressure. We've got this double top formation. The neckline was at 137.10, and we haven't even retested. We're still looking pretty ominous. The measured move target for this is 135.95, and this will coincide with the congestion area and the trading, which was built up into a channel in a consolidation phase way back in October, start of October. So looking negative for cable. Really needs to break below today's low. We've taken out last week's low at 136.42. Really need to sort of like have a little bit of a close below there to confirm downward momentum. Little bit of a pullback for dollar yen, back below the 4-hour Ichimoku cloud, which isn't ideal for the dollar. But is this turning into some sort of intra-trend head and shoulders type formation? We've had this swing low, the reaction higher to a neckline, a further swing low, so made a lower low, and then are we looking to form a higher low now, which would give that same sort of shape as a head and shoulders, inverse head and shoulders formation, although it's not an exact one, because normally you'd see that at the bottom of a trend, but we do see them intra-trend as well. So this is like obviously a bullish trend higher that we're seeing this type of formation. On the daily chart, we saw a shooting star, and that has been confirmed. So there's almost a shooting star formation, but again, this would be better seen at the top of an upward trend, and we're sort of in a corrective phase. So it's not ideal, but still one to be worried about. You can see the volume dropping off as well, as we've seen this sort of negativity creep in. So looking for some support in the dollar And so dollar yen still on the front foot, but looking a bit wobbly. Aussie dollar has formed a bearish engulfing candle yesterday. So we had a bearish inside Harami, slightly positive day on Monday, and now we've extended lower. So this is negative for Aussie dollar. 74.54 is the level we're looking to target, and a break of there should open up further down. So we expect to sort of like find some support there. On the 4-hour chart, we've also got as you can see, we've highlighted the 74.54 level. We've also got support from the Ichimoku cloud. We've tested the bottom of that cloud and had a little bit of a reaction from it, but looking under pressure from the Aussie dollar perspective. Taking a look at FX to cryptos, let's take a look and how is Bitcoin performing. Well, we're still in, for me, we still potentially have this head and shoulders formation. Volume is dropping off. We've got a little bit of indecision over the last few days, and price action has moved up this morning, but really needs to clear this resistance level around about 62,500 to 63,700 to really sort of like challenge the all-time highs again at 67,000. So until then, I'd still feel that the pressure's on. We can look at the other coins. Cardano still under pressure, trading at 195. 250 is the real level it has to challenge, so that's a way off. And again, this looks a little bit like we've got some bearish divergence going on a couple of these where the volumes are dropping off, the momentum's dropping off, and the prices are maintaining the same levels. And you can see it even more in Ethereum, where you've got the price moving higher and the volumes dropping lower and momentum also stalling. So although it looks quite rosy, Ethereum trading around its all-time highs, be very wary of this. It does feel like we could have a decent correction at some point. Looking at commodities now, let's take a look at oil. And this continues to drive higher. Last week's candle wasn't ideal for the bulls, but we seem to be sort of recapturing the lost ground from last week. The daily charts, you can see signs of the dips being bought into, volumes quite healthy, and the bearish momentum looks to be stalling and to be turning higher. So looking quite good on the WTI crude oil. Let's get some levels in there. We're back into the channel. We redrew that channel, and we're above the 4-hour Ichimoku cloud, so that's pretty positive. Really need to get above probably the 83.90 level to confirm a sort of like kicking on move. More of an upside target would then be around about $85. That's on WTI crude oil. Brent crude oil also looking positive and really looking to target the 85.78 resistance once we settle above the cloud. Little bit of bearish divergence still going on, even on the 4-hour chart. So still be wary, but it's looking pretty positive from where I'm sitting. On the gold side of things, we're still in this long-term downward bearish channel, but which is forming a bullish flag, so it's very conflicting. We're hanging around this 1800 level. We've had a swing low to 1772, a swing high to 1813, so around about 1790 to 1800 seems to be a little bit of the pivot level. That's where the 4-hour Ichimoku cloud is sitting. Slightly more positive momentum since last Friday, and the positivity has continued higher, but is stalling a little bit just in front of the $1,800 level. As I say, above the 1814 resistance, 1834 is the big one. We've seen rejection from there 4 times, and below the 1772 support, we're really looking at 1745 to 1750. Below that 1720 is the real line in the sand before we really target the 1677 area. So a bit of a mixed picture really for gold. Obviously been driven by the dollar. The dollar still for me feels like it will be stronger over the short term. Let's take a look at indices now. Indices, we've had a little bit of a correction this morning, as you can see in FTSE. FTSE's just been, we just triggered our short-term or intraday buy trade idea in FTSE. We were buying a dip at 72.50. Still looks positive overall, but obviously a little bit of negative stance in the morning to start off with. Bearish engulfing forming at the moment, but obviously we've still got a way to go to play out today. DAX, that's looking a little bit more positive. That's had a bit of a drive higher, and we are really challenging highs we haven't seen since early September, which is looking pretty positive. No real sign of that slowing down, and the real resistance level around, well, we can say it's a band. It's really between 15,940 and 16,030. We're not far away from there, really. We're only at about 80 points before we start testing that resistance, and doesn't seem to be anything slowing that DAX down. So looks pretty positive to me. Let's take a look at the Dow. Formed an all-time high again. Let's see where we managed to get to on this chart. 36,000. What a lovely round psychological number. Love that. So yeah, just sitting below there, had a minor correction, but still looking pretty positive. This is the 4-hour chart. The Nasdaq as well, sitting there just below the all-time highs at 15,920. Really would need to get below the 15,780 to be negative. So really continues to reap dividends there. We got above the 4,600 level in S&P. The all-time high now 46.27 on this chart, and support coming in, nice support coming in just below the 4,600 level. So dip buy into there, probably the way to go today. Although remember, we are seeing bearish divergence. This is a bit of a we are due a correction, but the correction just doesn't seem to come. Amazing. The Aussie 200 has broken down below the 4-hour cloud and has just reacted from support around about 7,300, resistance coming in at 7,395, acting as cover also. China 50, this is the one really that's in a bit of trouble. China struggling. Remember, 14,500. It's a way off now. It's 1,000 points away, but that is the level for me, which will be the real catalyst for an indice move lower. However, yes, we have formed a double top. We're trading around the neckline here. We can see this high here, these two highs here. So for me, the neckline coming in at 15,566, we are below that. So that could be the resistance which caps this reaction high we've had from 383, and we could expect to see further downside on China. Hang Seng also impacted, support coming in just below the 25,000 level. A break of there should open up further downside, and really that would target again the 23,680, which has been offered support a couple of times before. Nikkei are doing a little bit better, providing a little bit of support for the Asians indices and forming a bit of a bullish flag. So definitely divergence going on between them products. But will Nikkei be dragged down by China and the Hang Seng? Who knows? We'll have to wait and see. So that about covers it for the analysis. The gun to head challenge. I went with gold, and I got stopped out. Let me take a look at this. This is pretty much, don't know what's happened to my charts. They've all flipped about today. Yeah, went short of gold, 1784, got stopped at 1794, still trading around there. So a bit disappointing. But we go again. We've got a gun to our head, so we've got to try and pick a trade to go with. Maybe the one I'm really looking at, offering quite decent risk reward, just because of the pressure on the Asian Pacific, FTSE under bit pressure. Obviously the US is bucking the trend a little bit, but could we see further downside in the Nikkei? I'm going to go with that. Let's sell Nikkei at these levels, hoping for a break really of 29,400, and we can target a move to, let's target a move, a nice 3-to-1 risk reward move, so that we've got a little bit of a trend line coming here. I'm trying to be quite tight with this. That trend line coming there, downward trending, so the stop will be above that trend line. Really, ideally, it'd be above this swing high here, but we've got a gun to the head. We're looking for some decent risk reward on an intraday move, so we've got to be a bit more aggressive with it. Targeting a move back down to this congestion area down here. So that's getting short of Nikkei, 29,414. Stop is at 29,614. Target's 28,814. That's my gun to head challenge trade today. So I'll put that in. Lovely. So other things to contemplate the day ahead. As we said, not really a lot going on in the day ahead. We've got economic calendar, nothing really. We've got corporate highlights. Flutter Entertainment reported average monthly player numbers rose 13% in Q3. BP saw Q3 underlying replacement cost profit jumped to 3.3 billion from 86 million last year. It plans a 1.25 billion share buyback program. Standard Chartered said Q3 return on tangible equity improved to 7.1%, while income was up 5% at the constant exchange rate. And Untitled Pre-Bond ICAP enjoyed Q3 revenue growth of 15%, and full year revenue is now expected to be in line with 2020's figures. Well done, Untitled Pre-Bond ICAP. So that's it for today. Thanks for joining me. I hope it's been informative. I hope it's been fun. Yeah, thanks very much. See you tomorrow.